Welcome to the weekly Forex forecast. Let's jump onto the charts and see what are the next best opportunity for the upcoming week. As we are in December, we'll be restricting our trades and limiting our trades and risk and see what happens. So I've been forecasting Dixie from the day November, from the day of US elections, that we were expecting price to continue higher to either take this high, which market has already taken, swept it, and gave us some reaction and holding the fair value gap. There is still possibility price can continue higher to take this high one more time or to go even higher to tap 110 price, which I think is very psychological price for Dixie. And after that we might see a fall in price which we are waiting for. Going on to the daily time frame, let's go on 4 hour, because in the last video I've said that we are waiting for the break of this low and then a correction for the next fall. But what has happened is price has swept the lows twice, was not able to break the lows. So we can expect that this correction is either a continuation to go higher and take this high one more time before we see any bearish pressure coming in the market, or if we see some aggressive push higher, this can continue to tap the 110 psychological price which we are talking about from last few weeks and then fall down. So both the scenarios are still intact. Let's see how it plays out and let's follow it step by step and on daily and weekly, until and unless the last fair value gap we had was this, which is respecting the price. So and it is going higher up with that. So until and unless we don't see break of this fair value gap and price closing below it, I don't think so there will be any bearish pressure. We might see a bullish pressure only initially, and then we'll see how it plays out after going higher. So summing up, a push higher to target this, then a fall, or a continuation to tap 110 price and above and then a fall. These are the two best scenarios I can see on Dixie. Jumping on to the euro. So on euro, we have been looking at price from few weeks now, and I have been saying this price should not break above this high, and price has just induced it, and now it is going lower, which is a good sign for bearish pressure being still intact, because we were thinking that after this last break of structure price can initiate a larger pullback before the fall. But this sweep or say inducement is with this follow through is telling us yes, price can continue down from here as well. Jumping onto the 4 hour time frame, what we forecasted last week, that we need close below this low to be able for the price to go down, right? So price has just swept it, hasn't shown us enough of the proof that it wants to go down, but it is still bearish. And from the current price from the week open, it is evident that yes, price is ready to go down, and it is not that interested in my view that it will go higher. And with the recent price action also today, what happened? Price has induced this previous high on higher time frames, and if we see any internal break of structure on 15 minutes, then it is possible price can continue to fall down to break this structure, target this small gap in price at least, if not lower. If I mark it for you, this low, this low should be one of the targets for the bearish pressure, any bearish trade setup. So if I just go on to the 15 minutes just to explain the price, yesterday was just a consolidation, and there I found a setup which I secured 1.5% on that with the 50% partial here. And after that, price has moved higher again to target the previous inducement, which I just marked on 1 hour time frame. And now, if price continues to show us bearish pressure in the Asian session, and with the London Open, we'll see if we'll have any setup remaining for sells. Then we'll look for more selling opportunities for the price to break this structure and target these lows. And if you see, this was one of the trades I took, and the reason behind that was this buildup of this sell side liquidity. And if I bring on to the indicator, the session indicator, price has just grabbed the Asian high as well as the previous structure high liquidated it, then gave us some internal structure. That was my sign to look for selling opportunities, and I always take 50% volume off on 1:3 and take my full targets around the next liquidity point or the 10 RR. But yes, it just gave me 3 RR, and I closed my partial here and it reversed. It's fine, but yes, there is more opportunities for the selling opportunities, and let's see and wait for the any break of structure before we look for setups. Going on to the GU, and on GU similarly, what has happened, it has given us some sort of divergence, because if you go on EU and see, price has just swept this high and shown us some bearish reactions. But on GU, this is the same high as EU. It has given us the inducement, yes, but after the inducement, it has not given us instant bearish follow through like EU, but it has given us some bullish pressure just to tap into this fair value gap, because the price actions are a little bit different, and given us a divergence, because here we have this divergence, and on EU it's going down, price is going down. So yes, it is a good sign that yes, price is still bearish. And on the daily time frame on GU, it is evident price after this huge fall and displacement, price has given us this retracement into this fair value gap. It can come lower, a little bit higher as well, to mitigate any of the thing price in this last consolidation. Let's go and see on 4 hour. Okay, right. So yes, I'm still expecting price to continue lower on GU, but let's be cautious, because as price has shown us this last push higher, so maybe price can give us a fall here, start a little bit correction to the higher price in this zone. Or if I pull out my volume indicator, it's not working right now. So if I had taken average also of this, average for this will be somewhere here. So yeah, if this price for continues bullish during the day in London and reaches somewhere here 1.276, then we'll look for selling opportunities, because then at this price the selling price will be at the premium, and we can look for the selling opportunities. So that's all for GU on hourly time frame. Jumping on to the 15 and see the next best opportunity on as per 15, this is the one of the selling zones we have, right? Because if we talk about the inducement, this was the last pullback, and this high will act as our inducement which has been taken, but after that price failed to break this low and continued higher. That's all right. And now what is happening, price is building up, sorry for that, price is building up this liquidity. This has been taken, this buy side liquidity, and I think with just before the London Open or with the London Open, we will see a push higher to collect all this liquidity. Then with the break, we will look for selling opportunity on GU. Otherwise, we'll leave it and see what it wants, because there can be possibility price can collect this, then fails to break this low and continue higher to tap in the higher prices, which I just showed you at 1.276, and then come down. Right. So that's all for this one. Jumping on to the gold, this is 3 month time frame, and with the next year and December closing in 14 days, if this 3 month candle closes below this previous high, which is 2685.58, expect the January candle or the next quarter candle to start a little bullish, to come down into this fair value gap, which is at what price? The first target 2536, easy target will be that, and 2450 or median of this two prices. So this closing of this quarterly candle is very important, how it closes, and expect this to close below this previous high, and then January candle to continue down into this fair value gap before the next move comes in. So make sure you mark all these levels and expect price to move accordingly. Monthly, we don't see anything much uh, of confluence, because last month was just a bearish candle filling up this fair value gap, and this monthly candle has not shown us any bullish pressure. It has just been an up and down throughout the month so far, and we are still expecting it to continue down. On weekly, Okay, we don't have anything to monitor here, but yes, there is so much on daily time frames. So on daily, as we can see, twice price has just took this previous high, liquidated, came down, and again with this consolidation and some liquidity grab on the lower side, it pushed higher again to grab more liquidity from the higher side and given us this push down with the week open last week. Right. So now I'm expecting this week price. This is Monday was a doji candle, and it has taken some liquidity below the Friday open. So initially this week I'm expecting some bullish pressure to come in to go price higher around 2670 75 into this fair value gap, if not higher, and then give us some reaction to the downside. And this push higher, which I'm expecting towards 2670 75, it should be corrective in nature, not impulsive, because impulsive price with some fundamentals can make it aggressive and it might continue to push higher, which we don't want. We just want a push higher correctively, like the slow price action we can see in this zone, similarly to that, and then give us some bearish push. Jumping on to the 1 hour, as we can see, this was the last buy side liquidity grab with the mitigation follow through and respecting the 1 hour fair value gap and falling down. Last day, Monday, what we have seen, creation of this double top, two significant highs, a reaction, and today I'm expecting price to continue higher from the current prices to grab these two highs at least, and this high also if we have the momentum with the time with the session, and then give us the bearish move that we are expecting. And keep an eye on economic indicator as well, that if we have any fundamentals news coming on, any war news coming, so keep an eye on that as well, because we have a bomb drop in Syria as well last night, so that will also make some impact in New York session. So a push higher should be the next best opportunity. If price falls from here only, um, might be I might not enter into the trade. It depends on the price how it moves with the time, but it will be more better opportunity for the price to push higher to grab these two highs and maybe this high as well before, sorry, a push higher before any bearish pressure kicking in again. And this push high will give us some premium price to go lower again, and that will, and that should take price lower to grab these two relative equal lows. And this is, I think, purple zone is one of the inverse fair value gaps on higher time frames, and this is the demand zone I'm expecting price to tap in and give us some reaction, because overall we are expecting price to come into the 3 month zone, right, the fair value gap, but that will happen in January. So just to focus what might happen in next 1 or 2 month, price can consolidate in this area only, tap here, then again give us some bullish pressure, a correction before it drops here again, and then later after some accumulation in this area gave us some bullish push from lower prices. So this is what I'm expecting to happen in next few months, but let's focus on the day which we are expecting price to continue down. And this is the last position from last Friday I shared in the WhatsApp chat, and I'm still holding this a part of it, because yes, 50% I've closed with 3RR and I'm still holding the rest of it. And again, as I told on the high time frame, a push higher to grab these two highs, maybe this high as well, and then go down. So that's all for gold as well. And let's wrap up here. Make sure you like and subscribe, and do comment down in the comments and tell us what you want next video to be upon. And have a good one.